Traditional or the fast-track path to retirement, aka early retirement? Which will you choose? Well, given a choice, I believe most people will say, of course I want to be early retired right now. The problem here is, most people don't believe it's possible to retire early in their 30s, 40s, or even early 50s. What if I told you there is a middle ground, a sweet spot scenario that many people currently holding a full-time job can go for? In today's video, I'd like to introduce to you the semi-financial independent state, a huge level up towards financial stability and can set you firmly on your path towards full financial independence. Before I continue, I'll appreciate it if you hit the like button and subscribe to join our YouTube channel, and let's go! If you have been following this channel for a while, you know that my wife Fran and I conduct masterclasses a few times a month on topics such as financial independence, early retirement, breaking out the rat race, and about financial literacy. In this specific masterclass, we compare between traditional paths of retirement versus the fast-track type, right, which is early retirement. So let's go into talking about traditional ways of retirement first. Why don't people think about retirement, right? That is the question. And there's a lot of psychology that goes on behind all the way until the industrial age actually, right? But we're not going into too much detail. Let me just do a high-level snapshot on this, right? People think retirement is boring because when we look at our parents and grandparents, you know, they are sitting there watching their TV or going to the nearby coffee shops to have, you know, their idle chats with their friends and, you know, spending a few hours there. That's not the kind of, retirement that a lot of people like to look forward to, right? We like to look forward in today's times to, you know, a lot of travels, a lot of discovery, exciting hobbies and all that, right? So this kind of mundane lifestyle, this kind of unfulfilling lifestyle, you know, everybody go into like a slacker, you know, for the rest of your life kind of lifestyle, you know, it's not something that everybody would really look forward to, right? And importantly, what does it signal? It actually signals kind of like the end of life, isn't it? Like you work so hard, right? Then you get into your 60s, and finally you retire. Oh, I don't need to work, right? That's probably one of the first few things that people look forward to. But it also kind of tells you that, oh, life is going to slow down, you know, you're not going to stop having a very exciting life. And it's kind of like winding down for the end of life, isn't it? So it's not really a most exciting thought, right? It's rather bleak, actually. So in that sense, many people actually don't really think about retirement, right? And let me just explain to you the traditional paths of retirement in terms of a work career. Right? So in the mid-20s, some of us start work in early 20s, right? We start work, we graduate, we get our diploma, we get our degrees. That's when we start work. And then for many people, they settle down, you know, they get married and have kids in either their late or early 30s, or nowadays even later, right, in their mid-30s. And then in their 40s, what happens to their career? Now, a lot of people, they are usually very, enthusiastic when they start their career. The first 5 years, you know, they want to go and have a promotion, they want to get to the next step, you know, they put a lot of energy, they put a lot of time in their career, right? But somehow when many people got married and have kids, some have kids, right? You know, the career kind of slow down, and that's very evident, especially in your late 30s to your 40s, right? And it kind of decline. In today's times, it's even more apparent because, the work environment shifts so fast, right? Especially accelerated by the pandemic. And you can see that there's a lot of layoffs, cost cutting, and the people that are still in the workforce in their 40s, you know, is like, hey, suddenly it's not so stable after all, you know, even though I've committed like 10 years of loyalty to the company, but, you know, based on restructuring, based on the climate of the world, the economy, you know, my job ain't that stable anymore. So many people in their 40s, especially those that don't continue, you know, driving up or run out of energy to drive up the career ladder, they get stagnated, right, in their career, and it starts to decline. And what happens in your 50s? Don't forget, a lot of people retire in their 60s. So when you are still working in your 50s, it's still a good, 10 years to go, right? Naturally, your energy will be depleted, right, or depleting. And you kind of struggle to connect with the young people nowadays, right? Especially now the middle to the older Gen X, right? Those in their 50s or even in the early 60s, right? They have difficulty connecting with the Gen Zs, even the young millennials, because of such a vast lifestyle difference and the things that, you know, each generation look for. And definitely struggling with tech. You know, tech moves so fast, right? Tech advancements. You know, last time in the 90s, people don't even really send emails, you know, until like maybe a later part of the 90s. I started work in around 2000 ish, so emails was common, but actually in the 90s, it wasn't that common. So imagine people, struggling to get onto the emails then, right? So that's an example of struggling with tech. And definitely in your 60s, if you have however number of years towards your retirement, you're kind of just hanging on, right? And just hoping that nobody cuts you out of your job. So what does it look to you in terms of monetary numbers? Now, this is a estimated kind of a chart that shares a person's retirement savings net worth. Okay, and I'm simulating in just I'm not specifically referring to any kind of currency. So let me talk through you the numbers. All right, let me explain the numbers. So in your 20s, when you start work, all right, you start to earn a bit of money, right? And then you can see here in this slope over here. Let me just get my drawings out. So this slope over here, right, is when 20 to 25, when you start to have a bit of money, have a bit of salary. And then, of course, between your 25 to 30, you start to earn more, right? And then naturally, your savings increase. So what happens in your 30s when you get married and have kids, right? Your savings start to decrease because there's a time where you need to have a big ticket item that you need to purchase, whether it's for your wedding, it's for your honeymoon, or even buying a house, right? So you can settle down. And some people, they buy cars. So that's actually when your savings start to deplete. You can see from 30, 35, actually, there is a dip in your savings, right? And then, after you have your kids and then your career start to, continue its path, right? You can start to save money again. So, right, from here, 35, it start to increase, right? And then in your 40s, as I mentioned earlier, you are now the sandwich generation. You got growing kids and also aging parents. So some people have to support both ends of the generation, right? Including also supporting your own lifestyle. So your savings actually start to decrease a bit slower, right? And the trajectory start to go a bit higher when your kids start to get older, and perhaps some parents have passed on already, then your savings can, kind of consistently increase, but your career is actually going downhill, okay? And basically in your 50s, 60s, you're kind of just holding on. Now, over here at the age of 60, right, you look at this number, 60, let's say $500,000, right? There's this jump, right, into 65, right? It's because depending on the country you are at, like let's say Malaysia or Singapore, right? The EPF or CPF, there's some form of payout, or you can withdraw a certain lump sum, right? And of course, if you're not looking at saving more money in your 50s and 60s, I kind of don't know how to help you, okay? And I'm just talking about traditional path of retirement, okay? So 60 to 65, you can see there's a surge, right? Increase in savings. Now, let's say at your peak of your net worth, your savings, right, at 65, and that's when you retire with $800,000, right? What happens next, right? What happens in this point? This is important, right? Because at this point, the question to ask yourself is, do you have enough savings for the rest of your life? Because now you're going to stop working, you lose your source of income, right? So assuming you live until 80, 85, that's a good 15, 20 more years to go, right? What happens for the traditional people is their net worth, all the savings, start to deplete and deplete and deplete. Of course, how much it depletes or how fast it depletes depending on how much payout you might have from the government. For example, Singapore, right? You have a CPF payout at 65 onwards. And also how much savings you have. What's your lifestyle like, right? For many people, it's very hard to mirror the same lifestyle that they have during the career, especially the peak of the career where maybe lifestyle inflation is at the highest, right? So what happens? Right? When 60 plus, you are finally retired, a lot of people actually, and what I don't like is a lot of even governments, right, in that country are saying, hey, you have this condo or you have this 5-room HDB flat, let's say in Singapore, right? You downgrade, right? Downgrade your lifestyle, right? Downgrade your house, right? Downgrade your car. Either you used to have a car and then now don't own a car, or you downgrade, the car model that you currently have. Right? You reduce your traveling. Now, this is very painful, especially for, I would say, those in their 50s and younger. Now, we are so used to traveling, right? Imagine you tell a 30-year-old now you cannot travel for the entire year. That is such a pain, right, in today's times. So you reduce your traveling, reduce going to the cafes, reduce going to eat, and definitely you cannot afford the same kind of luxuries that you used to have in the past, all right? So that's important, right, to know that, in your 60s, hey, suddenly I got to downgrade my lifestyle. So when you're planning for your retirement, planning for your savings, this is something that you definitely need to know. What kind of lifestyle are you looking at in your 60s? Are you forced to downgrade, or Are you able to maintain or even up your lifestyle in your retirement where you should be enjoying your life? Okay? Now, let's talk about early retirement. Let's talk about something happy, okay? And it's entirely possible for any of us to be early retired because Fran and I have done it, right? So just to share a little bit about our background again, for those of you who may be new to this channel. Fran is Malaysian, who is a Singapore PR. I'm Singaporean, and we both have corporate work experience of 17 and 15 years respectively. We came from middle income families, okay? And one of the drastic things that we did in 2018 was to start hawker business. So we left the corporate sector and we started hawker business together. And unfortunately, it didn't work out. We did it for 2 years, but it was actually the learnings and the experience that we really needed to really open up our world to be able to be now financially independent, right? Which we retired early in 2020, and that was at age 40, so about 4 years ago. So one of the reasons why we are so passionate about talking about financial independence or early retirement is because we have done it and it is entirely possible, right? And we want to encourage you especially to begin on your journey because, you know, is number one, it's actually not as difficult as you think it might be, but at the same time, it requires continuous effort, determination, and being able to think out of the box continuously, which means you want to invest in yourself and learn, right? So one thing that we want to share to you as an early retiree is don't think of early retirement as an escape to your work situation, right? It is not about, oh, you know, I'm be early retired. I want to be financially free because I hate my job. I hate my boss, right? It shouldn't be based on the push factor, right? It should be based on a pull factor. So the pull factors of early retirement is really about building a new identity, right? Because many of us our identity got lost in translation during our work years, right? And we work for like 30, 40, 50 years, right? It's like such that our occupation becomes our identity, which shouldn't be the case, right? Because we are all authentic individuals and establishing our identity is so key, right? To how we live our lives. So early retirement is about also building a new identity now that work is out of the picture, right? It's about building a new mindset as well. When you approach early retirement, it's not just sitting there doing nothing, you know, and just resigning to life and let life drag you by, right? That's not how it should be. So it should be a new approach, new mindset, you know, a newfound freedom, right? And a new beginning. So I hope you can look at early retirement in a different perspective, something exciting rather than something boring and, you know, you don't want to look forward to it at all. Now, let me talk about financial independence a bit about the process, very high level, right? So the first thing is you earn money, right? Whether it's through your full-time income, you know, or any other kind of income. So you need to earn money for sure, right? You save money. After you save money, you flow some of your saved money, however you make the money, flow it into passive assets, right? Basically, you invest. And the passive assets gives you cash flow, right? Whether it's a property, whether it's a ETF, a stock giving you dividends, it's cash flow, right? It gives you money, right? And when your cash flow, your passive assets is equal or more than your running expenses, when your cash flow is equal or more than your running expenses, you are financially independent. And that's fantastic, right? Because don't think about it as, you know, freeing up yourself so that you can slack off for the rest of your life or be a couch potato. But of course, if that's your life mission and motto, then sure, by all means, you can be as well, right? But we would suggest be productive with your time still, even though you're financially independent, right? Now, this is the exciting part, okay? This is the whole kind of a motivation point that I would like to share with you today. Right? Because somehow, you know, if you're somebody who's working in the workforce for 10, 15 years and you have not started, you know, thinking about early retirement or being financially free, being financially independent, right? You might think that it's too big a step, right? Too hard to reach this. So in today's video, actually, one of the key points I want to establish is to share with you that you don't have to look at early retirement as a 1 or 0, right? You don't have to look at financial independence or a 1 or 0. It's either you make it or you don't make it, see? Means you do not do. Let me say that again. So it doesn't mean that, oh, it's so hard to get to this financial independence state, therefore I don't do it at all, right? I want to introduce to you that you don't need to only retire in your 60s. It can be earlier, right? And the other myth is there's no in-between scenario, right? Today is about the in-between scenario, the semi-financial in-between scenario, right? And don't think of retirement as an end state. Right? And I want to encourage you, for those of you who think it's too big a stretch, too big a goal to think about full financial independence, whether in your 40, 45, or 50, how about being semi-financially independent instead? So what is semi-financial independence, right? I'm going to share with you this first. This is the part that's important, right? It's a psychology part. So I want to ask you, is it easier for you to earn 3,300, right? Whatever denomination that may be in your country, a month in passive income, or saving up $1 million first before you can even think about early retirement, right? Is it easier for you to look at, okay, let me try and earn passive income of 3,300 a month, and then I'm semi-financially independent? Or, oh, okay, I need to save up $1 million first before I can even start to think about early retirement or financial independence. Now, that is a very big psychological question that a lot of people cannot overcome. Therefore, they do not even think about early retirement. So today, I want to encourage you about getting into this semi-financial independence state. I'm going to share with you 3 different types of scenario. They are very high level, but there are some numbers that I'm going to share to apply to it, to share with you, okay? So the first one is, and all of them are looking at 3,003 monthly income, 40,000 a year income, which is a semi-financial independent contribution or scenario rather, while holding your full-time job. Okay, let's get there. Okay, so let's say your salary is 7,000, right? Incoming salary is 7,000, and your expenses is 4,000, right? Now, if you have money left over, you want to put in that money into investments. And what kind of investments can you be looking at? I give you 2 scenarios. The first one is properties, right? One of my favorite asset class, right? I just show you some numbers. If you're able to build up and buy a property that's worth $500,000, right? Your rental yield and capital appreciation year on year, if you can get 8% from this $500,000 property, you can make $40,000 a year, which is $3,300 a month. If you can gun for a second property of $500,000 with an 8% rental yield plus capital appreciation year on year, you can be looking at a passive income of $40,000 a year. So that's one way of getting to $3,300 per month. Another way is ETFs, exchange traded funds or index funds. If you can get an 8% dividend payout plus price increase, your capital appreciation of your ETFs per year, year on year, and S&P 500 has been doing that, okay, for the last 20 years, you're looking at 8%. It can be done, all right? You are also looking at a passive income of $3,300 per year. Same capital, $500,000. So this is one combination of semi-financial independence that you can look forward to. I give you another scenario. Now, this one is more technical. It requires more effort for you to learn. Same thing, salary of 7,000 with expenses of 4,000. You flow 3,000 into investments and you build your capital, all right? Now, let's say trading, right? Whether you're trading Forex or trading options, this requires more time, but this skill set, what's beautiful is you actually don't require as much trading capital. Meaning, instead of $500,000 now, if you have $330,000, and you're looking at 1% return per month, you're looking at 3,300 as well. And this is based on 1% return a month. What if you can return 2%? What if you can return 3% a month if you're a very good trader? You see, guys, the focus is actually not on the capital, 330,000. The focus is actually on the 1% return. The 1% return is how good are you? So if you're focusing on your skill, that means you continue staying in the game of trading, of learning how to trade Forex or learning how to trade options. You increase 1% to 1.5%, 1.5% to 2%. Now, whether I give you 330,000 or 3.3 million or 3,300, right? If you can return 2%, 3%, right? You keep increasing that return. Won't your dollar per month go up, right? So it's actually in the skill that's important rather than thinking about the 1 million, the 2 million, and the 3 million before you can think about retirement. See? So people got the order wrong. People think that I need to have the money, then I can start learning. Actually, is you can start learning with very low capital, increase your percentage return per year, per month, and then when the sum of money comes in that you save, your capital, your $500,000, then you can generate a tremendous return. All right, so this is the second scenario for your semi-financial independence, right? Combination 3. This is not exactly passive, but it is a lot more time efficient than holding a full-time job. So same thing, salary 7,000, expenses 4,000. How about a skill-based job that can increase the dollar per hour. You know, I talked about this in some of our previous videos, right? If you want to increase your dollar per hour, right? Let's say in this case, you are online tutor or you do an online consultancy, whether you're a marketing consultant, you're a business consultant, or any kind of consultants, right? Let's say you charge $100 per hour. If you're only looking at 33 hours per month, which is 8.25 hours per week, compared to 45 hours per week for your full-time job, right? You can be earning $3,300 a month as well. Now, this is based on $100 per hour. What if you charge $200 per hour? Won't everything half? That means you only need to work about 4 hours a week, but you're still getting $3,300 a month. Or you work the same number of hours, you charge $200 a month, you're earning $6,600 a month. So again, it is in your skill. Your skill will determine your dollar per hour. No doubt this is not entirely passive, but this is something that as you get better, you charge more dollar per hour, you can also work lesser and lesser hours. By the way, passive income and passive assets doesn't mean you don't do any work at all. Even though you got money in your ETF, it should be your business to spend a little bit of time, 15 minutes, half an hour a day, to keep up with the financial news, to get in touch with your brokerage firms, any changes that they may have, and also understanding what's happening in the world today. So passive assets doesn't mean zero involvement. It just means that proactively you take a bit of time and you commit it regularly. And that's what you should do to maintain all your passive assets. Now, at the end of the day, it's really about building up your financial literacy. And financial literacy is not just about learning about investing and making money. It's all-encompassing. It's about knowing how to manage your money, knowing how you can make your money work really hard for you, right? That means every dollar you spend, are you maximizing the capacity of that dollar, right? Are you putting it to good use? Is it something that you're spending on an item that is ultimately giving you joy, making you happy, or you buy a white elephant that becomes a liability? So financial literacy is not just about knowing how to make a lot of money, right? It's also about the other part where you can control your budgeting, managing your savings, managing your expenses. Psychologically, how do you manage your money such that when you spend money, you're actually very happy about it? So all these are part of the processes of building up your financial literacy. And we want to support you as well, right? In terms of finding like-minded friends, right? In terms of joining a community, right? When you have a support system, somebody who can run alongside with you, having similar goals, having a breakout buddy or breakout group, right? Like what I'm going to share next, which is our community, right? We have built a community a few months ago. It's called Breakout Community by Fran and John. It's a free community, and you can join us by scanning. Let me just move this away. By scanning the QR code, or you search for us on Facebook called Breakout Community by Fran and John. So we want to support you with our YouTube videos like this, with our masterclasses, and also our breakout community, so that we can, we can get more people, right, to be financially independent. Then together as a group, we can create more impact. So come join our Facebook group and let's make it together and learn and grow. I hope today's video has given you many great ideas to embark on your financial independence journey. Come join us on our free masterclasses where we cover topics such as financial independence, early retirement, breaking out the rat race, about financial literacy, and many more. Click on the link below to join our mailing list so that we can send you the upcoming details of our Zoom webinars. Also, come join our free Facebook community by either scanning the QR code or by selecting Breakout Community by Fran and John. Thank you so much for watching this video. Do hit the like button, share this video with all your friends, and join our YouTube channel. See you soon!